Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bearish scenario where we are looking for a continuation to the upside but then a rejection in the common target area for a wave B of an expanding flat in a 3-wave A, 3-wave B and then a 5-wave impulsive C towards the downside. The common target for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of wave A, giving you an important target area between 76.9k and 78.8k. What is nice about this scenario is that price then takes the high, leading to some FOMO and greed. However, instead of continuation, we get some absorption of market longs with bigger limit short positions, dragging price towards the downside. If we look towards the downside, the target area is between the two 1.618s, between 56.6k and 50.2k. We expect a strong impulsive structure to the downside in a wave C, usually a very quick move, which can also install some panic and some fear, especially breaking a little bit of market structure here. However, we will continue to look towards the upside as the probabilities for the trend to continue are much higher on the higher time frames. At the moment, the invalidation is price taking this low before taking the all-time high. If we then zoom in to the final portion here of this wave B, we are looking for a 3-wave move towards the upside in a zigzag. Here we have our 5-wave A, 3-wave B potentially already finished, and you look for a 5-wave C towards the upside, overlapping with the wave B target area. Now in this scenario, we have an 886 touch, and that is quite important because in bearish scenarios, if one would look for impulsive structures to the downside, the 886 is a very rare target for a wave 2, increasing probabilities for price to take the high here at 71.3k, and that's of course what we're looking for in this scenario. Now this wave B might already be finished here with a WXY, and we look for continuation, so therefore another 1, 2. This wave 2 might not be finished just yet. There is the possibility for a flat, as I will explain in a second, before continuation, as we do have some resistance above and some support below price. The blue box here, 71.6k, 72k, and then we have the blue box below price, 69k to 69.2k. So that's the first resistance and support area around price at the moment. We are then looking for price to continue towards the upside in this wave C. If we look at the bullish scenario, we're looking at a finished 1-2 structure, and then we do want to see continuation to the upside. So we don't want to see a rejection in the target area for a wave B and then a move back towards the downside. Here we are looking for continuation to the upside in a much bigger wave 3. In this scenario, this wave 2 retraced to the golden pocket Fibonacci taken from the low to the high of this wave 1, which is a common target for wave 2. And then we're looking for continuation to the upside, where we then have another wave 1 and 2 of a lower degree in white over here. In this scenario, if we go to the 15-minute, we have our wave 1 that is finished, looking for this wave 2. Again, either finished or potentially a flat structure. And the reason I like to look for a flat structure here is because the 886 touch that we have locally. We of course have a potential WXY here, zigzag, zigzag, and then potentially a flat, but it would still lead to taking this high first before taking this low. So the bear scenario locally would be for price to actually take the high here and then move towards the downside. We hit the 886 again, 886, rare target for 2, common target for a B or an X. Any move towards the downside here has a higher probability of being corrective in a wave C or a Y, increasing probabilities to take this high sooner or later. Also, the common target area for a wave 2 is the white box here between the 05 and the 786. Currently, we did not hit the common target area for a wave 2. We only hit the 382 area, as you can see, which is an uncommon / rare target for a wave 2. Therefore, there are some probabilities for price to move towards the downside inside that common target area, and we have of course the additional support area over here as well, just sitting above the golden pocket. So that is quite attractive indeed. If we go to the 4-hour time frame, then on the 4-hour, the bearish scenario, actually continuation of the range scenario, is this triangle here where we are looking for an ABCDE 5-wave, a sideways structure, after which we expect continuation to the upside. In this scenario, wave B is then a simple ABC 535 structure, because in a triangle, 4 out of the 5 waves have to be simple zigzag structures in an ABC 535 up or a 535 ABC to the downside. If one of the waves is not a simple zigzag, it is by far most common a wave C or a wave D and not a wave B. So therefore we have to label wave B as a simple zigzag ABC towards the upside. However, we do see the 0.618 on the chart. That is a trend-based SIB extension taken from the low to the high of A to the low of wave B. And the common target for wave C is the 1 to the 1.236, which is up here. And clearly we didn't hit it as we hit the 0.618. But the 0.618 is a rare target for a wave C, lowering the probabilities for this scenario. Now locally, we are then looking for a move to the downside, a finished wave A. We want wave B to finish and then an impulsive structure to the downside in a wave C. However, if the high is already in of this wave B over here, and you would be looking for an impulse to the downside, this being a 5-wave structure which doesn't have the highest probability, but then you have a 1, 2 and then a 3 to the downside, but your wave 2 hit the 886, and as mentioned, rare for 2, common for B or a wave X. Increasing probabilities any move down is corrective, increasing probabilities to take the high. So at the moment, probabilities are towards the upside, and we observe the reaction that we can have at the target box here, as we do have the potential in the bullish scenario for a flat, which means this move is an impulsive structure to the downside before continuation. At the moment, even finishing a wave B over here does not look very good, as then we either have a flat structure, ABC, in a wave W, zigzag in a wave X, and then we're looking for an ABC to the upside in a wave Y over here, and then we want to see a strong rejection, but we want this wave Y then to finish without hitting the bigger 886 that we have, right? The 886 is sitting at 72.2k. Hitting that 886, and then again, probabilities are going to be lower for moves to the downside, increasing probabilities to take the bigger high. Talking about a big 886, the 886 on my chart here is taken from the high to the low, is hit, as you can see, decreasing probabilities for impulsive structures to much lower prices. Any move towards the downside has a higher probability of being a C or a Y, increasing probabilities to take this high over here sooner or later. And the bullish CVD divergences that we have in this range so far, and here again also support that narrative. We do have a little bit of bearish CVDs locally, as you can see, lower high in price, higher high on the CVD. However, what is countering the CVD is that 886 touch locally. So yeah, you have bearish CVD divergences where the target is this low, but you also have an 886 touch, which increases probabilities to take this high sooner or later. So therefore, I like to be patient in this local area. I know the support area of interest or the resistance area of interest and the support area of interest, and I wait and see what price is going to do in those areas. So if we then look at the probabilities of the different scenarios, then currently the probabilities are highest for the flat scenario slash the bullish scenario. In other words, looking for 74k before 64k, where we have either this scenario, which from a trading psychology perspective is very interesting indeed, FOMO and greed activated, moving price down for some panic and fear, and then continuation to the upside, or we have the bullish scenario where we look for continuation. On number 2, we have the triangle here, currently lower probability scenario, where we're looking for a wave C to the downside, then a zigzag in D, in E, and eventually continuation. If price takes the high over here at 74k, then we have to observe the reaction in the wave B target area. That is going to be very, very important, because from a trading psychology point of view, I would love to see a solid dump before continuation to stop people out and create a bit of panic and fear over here. First take the all-time high. That would be the cherry on the top, right? Greed and FOMO, impulsive, strong move to the downside, creating panic and fear, and then we move it back towards the upside, which is a very attractive scenario, but we need to have proof of resistance. Like we always say, we want to see proof of support, proof of resistance, not YOLO, FOMO, and catching knives, unless that's part of your plan, right? So let's see what price is going to give us today. I'll be live later, of course, so I would be happy to see you join. Thank you for watching this video. Hopefully it was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.